All right, so trading psychology. Trading psychology. So in trading, one of the most important aspects, other than knowing how to analyze on the charts, right? You need to be able to have a specific state of mind. So now that state of mind compromises for several things. These usually affect how you perform in trading, or it affects your trading performance. Now, this is very important. One, because trading deals with emotions. It has a part of it which deals with emotions. And the reason being is whenever you're trading, money is involved. And money is an emotional aspect of our daily lives. So that's one aspect. The other one is it deals with confidence. I'll break all of these concepts I'm talking about them. It also looks at confidence as well. So it can affect your confidence. I'll explain how, but a gist of everything is how confident you are in life away from the charts is also always going to be reflected on the charts when you come back to the charts. I'll explain more on that in details. Then the other thing is, so I've talked about emotions because there's money involved. I've talked about confidence, emotions. These are like the two main things because emotions, that's where we have like greed and fear. And I'll explain all that in more detail. So to begin with, we'll look at this. So this is my trading mindset. So the first thing is mental state. Mental state is very important. Now, this also touches back on confidence. What I basically mean is this. If you're very confident in real life, like even away from the charts, like you're very confident in the decisions you make, you're very confident in whatever you're doing, like you are not always second guessing yourself. You are always somehow I can even say you're almost certain that whatever you decide is always the right thing. That when you bring it to the charts now, it will be very easy for you to trade because you won't be second guessing yourself once you see a specific setup, right? That means if you've seen confident people, even if they are wrong, they'll always find a way to like be right in some way. They'll try to like pick the positive aspects from whatever decisions they've made. So that's the first concept when it comes to like trading. You need to ensure that in order to have a strong mental state of mind, you need to have confidence in yourself. And how you build that confidence, you build it through I don't think I can write. I can use this. So you build confidence through having what they call something that I call an evidence stack. So like you just create a stack of evidence. In short, when you are trading in the financial markets, what you want to do is start creating small wins. Now these wins should be both in real life, whenever you make a decision, make sure you stick to it. And then when you come to the chart, whenever you make a decision, make sure that you stick to that as well. That's just a small thing that you can change, but it can transform your trading life. So that's one aspect of it. That's fundamental states. Then building confidence. Confidence is built by having evidence. evidence is just a stuff of things that you've already accomplished. For instance, if you know how to solve a particular math problem, it doesn't matter how many people believe that you can't solve that particular problem, because you've done it so many times that you've built confidence in yourself. You are able to stand whatever criticism other people are making about you. Hence, that's the same mindset or mental state that you are supposed to develop when it comes to trading. Why? Because in the market, you'll be required to make decisions. Some of them, everything might be in your favor, but it still ends up not going as you thought it would. But other times, you find that the markets would do exactly as you want it. In other instances, they don't. So then it becomes an ego thing. Like once the market goes exactly where you want the markets to go, you feel like you've now mastered everything. Then sometimes when you don't do that, you find that you might lose your confidence. So that's why it's important to have built an evidence stack. Now this will prevent you from falling into that trap, because you already know that you've done this so many times. Hence, just making one wrong trade doesn't make you a bad trade. So this is under mindset. That's the mindset you're supposed to have. So the challenge here is this. After listening to this, whatever decision that you make starting from now, make sure that you follow through. If it's something that you know that you can't manage to do within the period of time that you thought you would, just extend the time period, but ensure that you do what you said you would do. It's a minor change, but it's very important in the trading world. So that's under mental state. I'm sure you have this pamphlet. You should read it. I'll just go through the main things. Yeah, so then the next thing is trading performance, tracking your trades. This is very important because this helps you create what I was talking about earlier, which is an evidence stack. Once you have this documented, it means automatically every time you feel let down, you can just go back to all the trades that you've ever taken and how they played out. Once you have that in mind, you'll be sure that you're a good trader, even if the current one that you had didn't go as you thought it would. So it's important to document your trades. Next, we want to look at market conditions. So now for this one, you have to be flexible. When I'm talking about market conditions, essentially markets change all the time, they're dynamic. So that means you always have to be able to adapt. You have to be flexible. You don't have to always stick to what you're doing if it's not working. So that's why it's important to always be dynamic when it comes to looking at the markets. Shortly, we'll look at trade examples on this as well. Then, in order for you to achieve anything in life, you need to have positives and negatives. But mostly, many people focus on the negatives rather than the positives. So this is also one of the things that makes a lot of people not succeed, not just in trading, but in a lot of things, because they focus so much, they spend a lot of their time looking at only the negative aspects of something rather than the positives as well. So this is important for reflection, because the negatives will always help you to improve, and the positives will always give you some sort of confidence that you actually know what you're doing. But sometimes what happens is mostly you see the negatives before you can see positive changes. That's why it's important that whenever you have negative feedback, you strive to find some key lessons that you can improve upon. It's like a signal showing you that you're not as strong as you thought. Hence, you have to improve certain things. Then percentages achieved. So you look at trading in terms of percentages rather than looking at it in terms of the monetary gains. Then I have all these additional tips you should be doing. Weekly reviews, ensure that you take screenshots of your trades, then stay consistent, meaning use the same trading strategy throughout. Then you integrate technology as well, so you can use like your laptop, computer, whatsoever that you are using, to ensure that whatever data that you are getting, we are improving upon it. Yeah, so it's always important to keep a trading journal, especially if you're a beginner trader. Hope that makes sense. And from here now, let's go to the live. Let's go to the live markets. So we're going to go to the live markets just a minute. I show you exactly what I've been talking about. All right, now this is a live market. This is a live market, so let me just move part of my analysis for last week. So now here is how we're going to analyze this. So overall, we can see that this market is in some sort of an uptrend, right? Because it's making high highs and lower highs as well. You can see, and it's right there. So we're anticipating that this is probably going to push up. But let me bring your attention to something. By the way, here we're looking at this market on the daily time frame. So that's why I start my analysis from. We'll look at the daily, we'll look at the 4 hour, the 1 hour, then the 15 minutes. So this is how I'm going to be looking at it. You notice that, before I even get that, let's see what it has been doing this week. I want to bring your attention to where I've set for them. Generally, we know that this has been in an uptrend for the last month. But here where we currently are, we saw that there was a strong push to the downside. Then there was this small candle here called the spinning top, or just dojis, if you like. Then we see this strong gravestone doji, this one. The next one, which shows a strong rejection of any upward move. So this is telling us two things. One, the sellers have a lot of momentum. So when this market opens, it's more likely to push to the downside like that. Going like this. It's more likely to push to the downside before it continues going upwards. Why? Because after this momentum candle, you can see this black momentum candle. After that, we saw that the sellers stepped in because this was like a key level. If you've watched my other videos, you probably know how to like identify key level. Just change this to a line chart, then you'll be able to see where the market was turning from. See, these are like turning points. So let's go back to candlesticks. So now this where it is already the market, that's a key level. Hence, we saw this push in the opposite direction, pushing upwards. But this move did not last because those strong downward push from the sellers pushing the market downwards. Hope that makes sense. James, does that make sense? No, you can just react. You don't need to unmute. Just react or send something in the chat. Okay, let me say things. Does that make sense?
Yeah, it is making sense. Again, I'm following. It is making sense.
Okay. So now, the next thing you want to do is, after you've identified that, remember, I'm only focusing on this point here because this is the most recent price action. We're just focusing on this. So now what I'm going to do is I'm going to say this market is within this specified zone. We have this level, the upside. If you want, you can put that level where the wicks are, like that. It's just that when you do that, it will take longer for the market to like break that level, going to either one of these sides. Now, here what I'm trying to do is I'm trying to create what is known as a bias. I'm trying to determine what, so a bias is simply my idea of where the market is going. Where the market is going. So that's called the bias. Wherever I'm thinking the market is going is my bias. So now, generally, we can see that this market overall is in an uptrend. But here, where it is currently, let me see. But here, where it is, we saw a strong rejection. That's like a strong rejection of lower or higher prices. I mean, a strong rejection by sellers, meaning sellers were more in control than the buyers. And this level is a support level, right? So we're anticipating that this market should, from this point on, push to the upside. But since we saw that the sellers had more control than the buyers, then that should tell us that this market is most likely going to push to the downside. When it just opens, it will push to the downside before it can continue going upwards. Or if the sellers will maintain that momentum, then that means it will just change directions. From this point on, it will start going to the downside, like that. So what we're supposed to do is just sit back and wait for the market to open, then it will show us the direction. Because remember, once the markets open, these candles will start moving. So they will start moving, either breaking this to the downside or pushing upwards. Since overall this is an uptrend, it will push. We'll only be interested in this market once the levels I've just drawn are broken. Either it breaks this, starts going up, or we break below that level, and then we start going to the downside, like that. So we'll just wait for the markets to open. Then once it breaks any of these levels, that's when we can trade. We can trade either to the upside, going long, or shorting the market, meaning we're just selling. But in the meantime, we'd have to wait. Now, this same analysis we've done, since this is top-down analysis, I was looking at it from the daily time frames perspective. I'll just move to the 4 hours, then kind of see what is actually going on. So let me just do this to bring your attention to something. Let's say here where the market is, you can see, right? Here we just saw a strong push by the sellers because of this week here, this week rejection. We can see that these were sellers who were actively pushing the market downwards, rejecting any higher prices. Now I want to see this same scenario on the 4 hours. So now the 4 hours is going to put everything a little bit into perspective. So we have some key level there. So you can see when the market came back to this point, there was a strong push upwards and then a strong rejection. But currently you can see that I am referring to this here. You can see that there is this weak rejection. We have this weak rejection, and then the market started pushing to the upside. So this means to cover our blind spot, since here we can't really determine what was going on other than there were strong sellers who stepped into the market. And our bias generally is that this market is moving to the upside. And here where it came back to, this is like a retracement, then this is a support level. If I extend this, you notice that this has been like a support level from previous levels. So now let me move back. So you can see what's going on here. We have that. Now, we want to ensure that this is even more, it's even more and more digestible, like to understand. So what we want to do is, instead of just looking at it on the 4 hour time frame, we move on to the 1 hour. By the way, I keep on removing the key levels because I don't want to have like a lot of levels marked on the charts because that can be very confusing. Now, on the 4-hour time frame, the level that we are looking at is starting from that point all the way to this level. Is this point here. So then you'll notice that the market made a double bottom like that, then started pushing to the upside. So remember, we're coming up with the bias based on the higher time frames. On the D1, we noticed that overall we were in an uptrend, but where we were currently, let me just go back and let me remove this. Let me just remove this and that. Yeah, so I was saying overall this is an uptrend, right? So meaning our bias will be we're only taking trades going long or buying, in other words. Now looking at the H1, you notice that this level here formed a double bottom. So what we'll be anticipating is that this market has to break. You see, these are the most recent highs it had formed. You can see where it was here. It tapped into that level, started going back downwards. The same thing happened here. It tapped into that point, went down, broke past that level, came back down, tapped into that. It has now started going to the downside. That may just be a retracement. So what we want to do is we want to wait for this market to come down, either it reaches back to this point, and then it breaks this level, the one I've just drawn, comes back for that retest, then we take a long all the way to the most recent highs, which is that level there. So this is what we're going to be anticipating is going to happen. But in case this doesn't happen, you've seen here, right? This is what I'm hoping is going to happen. It's going to push to the upside. But if it doesn't, then it means I'm going to change my bias based on the daily time frame market open. If this pushes further down, then it means we are no longer in an uptrend, but rather we're in a downtrend. So just like that, that's how I'm able to like do my top-down analysis. Do you have any questions on that?
I didn't
Right.
get you.
What? Okay, let's look at
Didn't get
something.
you.
I can hardly hear what you're saying.
Are you
Alright,
with
just
a buy?
oh for you, yeah. For US oil, well, our bias is a buy. We are hoping to go long for this. But then let me try to do a top-down analysis for something else. Let's look at USD JPY. So let me just remove this. So we start with the daily time frame. Already you can see that this is an uptrend. The market has been moving in some form of an uptrend. But where we currently are, that's where our main focus should be. So where we currently are is just right there. So I want to zoom in to see exactly what has been happening there. So you notice that we have some form of consolidation like this here. So this currency pair usually makes these consolidations before it continues in any given direction. What we would want to see starting next week is the market breaking above that. Once it does, we go long. Hope that makes sense. It's just as easy as that. There's something that I need to check. Let me see.